Good morning. Welcome to Investor Webinar. I understand we're doing it as agreed in English, since we have some people also listening who don't speak Estonian. We are here, Priit Põldoja, as a founder of Inbank and chairman of Supervisory Board, Andresoo, also a founder and chairman of the board, and Marko Varik, who is a member of the board and chief financial and risk officer. We are going to give an overview about Inbank business and also talk about the subordinated bond issue, which starts in Nasdaq Tallinn today. First of all, welcome and thank you for joining. Maybe want to talk a couple of words why we are coming up with subordinated bond issue at this point of time. As you know, Inbank was established as a hire purchase company in 2010, and since then we have been growing in over the last 6 years very fast and became a bank, a licensed credit institution in April 2015. So far we have financed our growth through equity and increase in profits, but as a bank we need to strengthen continuously to our capital position to support our growth, and this is the main reason we are coming to the market with a subordinated bond issue. We are intending to use the capital to grow our loan portfolio in Estonia and also in new markets. The second point is that we have decided to come with a listed bond. The issue is actually not particularly that big that we could have done it non-listed, but we decided that this is a good time for us to come to the market, considering the lack of investment opportunity for many retail investors, and also very low interest rate environment and lack of opportunities, especially I would say in Estonia, for investors to find yield. Secondly, it's a philosophical issue for us to be an open company, to be a company which has a larger range of investors in the future, and this is also a first step for us to open up opportunity for outside investors to be part of Inbank growth story. We like to be an open company, and we like to continue on this road in the future to have our capital listed in stock exchange, and this is the reason we are doing a listed bond at this time. Maybe now we can jump into the presentation. You probably have gone through privately also this presentation. I will jump immediately into the page number 6, where we give an overview of Inbank. As mentioned, me and Jan started Coffee, which was a predecessor to Inbank in 2010, mainly focused on hire purchase in Estonia. It's järelmaks. And over the first 4 years, I would say, we reached a market-leading position in hire purchase and started to look at the growth opportunities in other areas. And by 2014, Inbank entered the Latvian market through a subsidiary company where we have today about 17 million loan portfolio. We received a credit institution license in 2015, and we also have 2 considerably important for our business affiliated companies, Coop Finance, which is owned together with Coop Estonia, formerly known as ETK, and Crediidipank Finance, which is a joint venture with Crediidipank. But in more detail, we will talk about our business and affiliated companies later. Currently, we have actually more than 81 people, I would say, today already. And I think what I also wanted to say is that we tried to go through this presentation in about 30 minutes, and then we take the questions. I understand the questions can be given by writing. Okay, but let's move on with the presentation.
Okay, I will take over from here. I'm Jan. Welcome from my side as well. So when we're moving to the presentation, forward with the presentation and look at slide number 7, I think I would like to highlight that the graph itself is actually presenting the real-life dynamics of our portfolio growth. So currently we have close to 45 million euro portfolio and over 150,000 customers or agreements, or credit agreements. And maybe what I would like to highlight with that slide is more like how we see our business, what is our business concept. We are very strongly believers of product-based approaches, but not only product-based approach, but it's rather integration of product with channel and the partner. Therefore, we started as a hire purchase provider in 2010. We made first agreement 2011 in January, and it was our start. And currently, we are very proud to say that there is more than 300 different partners providing our hire purchase solution on the daily basis. Moving further on, we introduced the second important product in our portfolio is a payment credit card. But it's not like we just did a credit card. It's rather actually we made into the joint venture with one of the leading retail chains in Estonia, Coop, and then created basically the very specific credit card product for their customers, because they have a huge customer base. It's more like a 600,000 loyal customers, and we designed the solution very specifically taking into account the situation at that particular channel. And going further on, we actually did different other joint ventures with another bank, with the Crediti Bank, and further on basically with Auto24, which is a car marketplace, where we again analyzed the internal needs and basically very clearly designed the solution into that channel and into that environment. And this is how we see basically what is different from maybe other banks who are maybe more driven to relationship type of like a business model, that we basically would like to do rather channel or distribution or partner-based solutions, and designing it very specifically taking into account this particular situation. And actually it worked very well, and therefore we like to say that we have many products or many channels, and this is actually giving us the opportunity to see that we are basically on the monthly basis selling more than 7,000 agreements and more than 7 million euro credit limit to our customers. And this is very kind of important part of our thinking. Priit wanted to...
I wanted to add as well something important actually from the beginning. If we look at our hire purchase business, but also cooperation with Coop or Crediti Bank or Auto24, it's very important that in most of these cases we have exclusive relationship with our partnership, and this allows us to have a first credit selection on customers who come to ask a loan. If you just advertise a consumer loan product on a web or in general, you might not necessarily always get the best credit quality, but through a different channels and focusing on basically an average customer, we do not have an adverse credit selection. We get an average credit selection. I think that's also important in terms of building a credit quality in our portfolio.
Mm-hmm. And which is not presented here, but it's extremely important when we're talking also the development of our business. We haven't spoke about technology, but here we highlighted the partner-based approach, product-based approach, like distribution, but the technology is a very, very integral part of this business concept. Means that we are saw from the very beginning that without our own technological competencies, we cannot really be sustainable in this kind of competition environment. And therefore, we made a very strategic decision to really develop our own IT company. So currently, we have the knowledge inside the organization who develops all our technological solutions, applications. And this gives us also very, very good maneuverability to really integrate the needed solution in the different kind of distribution channels, and we have pretty quick time to market wise. I think that this is for us have been always extremely important, because to be very, very honest, we're also making internal jokes regarding either we are more like a financing or IT company, but the truth is basically somewhere in between, that we are like both.
That's just what we keep in-house. Besides technology, we always keep in-house the credit decision making, and this is basically with all these joint ventures, including actually Priit Bank, Sihtlaenis, we are the ones who are managing the credit decision making.
Okay, let's go further on to the slide 8. Then you basically can see it's a similar picture which you saw in the previous slide, but it's more reflecting very specific numbers. It's a growth of our loans, and also starting from 2015, we basically entered into the deposit market. So this is basically have been the most important source of our funding, and currently we have close to 50 million euros deposits already taken from Estonian retail market. If you go to the net profit graph, which is next to the loan and deposit portfolio picture, there you can see basically we have been pretty successful from the beginning after our so-called startup phase, when we invested and actually built our organizational capabilities and starting to grow our portfolio. We ended up with profit starting 2012. In 2014, I think we reached to some, it's like a peak of our efficiency as a separate independent financing or hire purchase company. But of course, after that, we're starting to prepare for credit licensing, and of course, it means that monoliner type of hire purchase company became a bank, which is also mean that we have to invest heavily into the infrastructure, into the people, into the adapting different regulation, risk organization, compliance, internal audit, just name it. And of course, very clearly it driven the cost increase in 2015.
Additionally to that, actually in 2015, we entered the Latvian market, actually, exactly, and we built Latvian organization and portfolio, and we also acquired 100% of our IT company. So basically, that's also what all happened in 2015. Yeah. Nevertheless, we basically almost reached the same profit level as it was in 2014.
Of course, after becoming a bank, very clearly our let's say, simplified the business strategy was very clearly growth oriented, because we built a pretty extensive organization. We actually increased our cost level, and it means that we have to really start to grow our asset side, and now we have managed to grow our business pretty nicely, and the 2016 6 months basically we already reached more or less same profitability which was last year annual profit. Therefore, we already see the improvement in that respect. Next slide, slide number 9. This is basically giving you some justification that things what we have spoken to you, also giving you feedback from the market side. So how we have done our business is also got a feedback from the market, that we managed to gain pretty remarkable numbers in respect of the market share. So hire purchase wise, there is a couple of.
I understand that you don't have that slide. There is a misunderstanding basically in the presentation. We have a market position slide here showing basically that Inbank has about 20% market position in hire purchase as an end of 2015, and we have reached 8.5% market position in consumer loans among banks. Basically, the point of this slide, I think, which is available on this long presentation, is to show that our market position has improved. It continues to improve. We currently do about 20% of consumer loan sales among banks, but the portfolio market share is just 8.5, which should show that we should continue to grow our market position and portfolio in Estonia, and that the business model, what we have discussed about, it works. We are gaining market share. This is where we feel as well that around 20% market share for us in Estonia is kind of a normal size at which in our niche actually we feel quite comfortable, and we can easily feel that we can as well defend. And as we can see that we're still about to gain market share with new products, so we should continue growing as well in Estonia. But let's just then go to the next slide.
The number of the slide is 9, yeah? It's a group structure and shareholders. Here you can see basically the purple color representing the companies which are part of our consolidation group. It's Inbank as a company which is also mainly providing hire purchase and the loan product to Estonian retail customers. We have a 90% shareholding in Inbank Leasings. It's a Latvian subsidiary. 10% is owned by the manager of Latvian business, Artur Saburov. We introduced Inbank Leasing AS, which is 80% owned by Inbank, 20% is owned by Fusion Varahaldus AS, and then this is basically the newest venture which is providing hire purchase for corporate customers. Basically, we introduced it because many of our partners asking also a solution for corporate partners, and it's our first company who is doing that. Then we have our own IT company, Inbank Technologies. We entered into Poland with a branch. So starting from the 1st of August, our team is working in Poland. And it was last Friday we got also registered legally the branch in Poland.
We are still in a process in Poland of receiving the license from FSA to operate our branch there.
It's more like a legal, legally now we are existing, but of course we have to really get the license in order to start to operate. Then Veriff for you, it's a new venture. It's a little bit long on the peripheral area of Inbank. It's a new startup initiative that we basically started with Fortumo, and then it's Mobi solution, and it's dealing with internet-based identification services. It can be like a separately also pretty interesting business opportunity, but for Inbank it's most definitely a very, very strategically important tool for process efficiency, or actually providing also to customers more convenient way to how to really buy credit products.
Basically, in a banking, the identification still is one of the major areas where banks need to invest money, and moving into online identification is a big opportunity for banks. So what we are looking here is basically capture that opportunity as an investor into Veriff, not really use it only for our own solutions, but basically have this solution available for other banks and grow it also internationally. So it's kind of a startup investment as well for us. And also we have just highlighted briefly our also shareholder structure in this slide. Coffee Investering, with the company owned in majority with me and Jan, is currently 31% shareholder, and the largest shareholder is an investment company, Pershing Hall, which comprises of 7 Monaco-based private individuals who are investors in that company. Altogether, 36% of the company is owned by founders, and the employees of Inbank today. Let's move on. We have a slide about Inbank business focus. Why we have it here is this is what we believe is a kind of a backbone of our company strategy. We have always said that we are a product-focused company, and we also have a very clear focus on what we do. We want to continue that approach, that we are focusing mainly on consumer finance products and collecting deposits to help to fund our business. This is what we do. This is how we can invest also much more focused our resources. We can also recruit the talent which is able to focus clearly on one area, and this is important, I think, especially if you see how the world is developing also technologically, that more and easier is to distribute the product over internet, easier is to bundle the product through different partnership distribution channels. So this is our strategy to be that product into this technology type of distribution, not as much try to build a universal bank. We clearly not that. As technology already unsaid, this is very critical for our business. We like to have the proprietary technology and like to keep it centralized. What it means is whenever we go to a new market, to Latvia or now to Poland, we use the same technological platform so we can leverage what we have already done. Very critical for our growth, and I think it solved actually our growth issue in 2015 was the access to banking license, European Union banking license. It's a license which we can passport throughout European Union, and we already have done that, for example, in the case of deposits to Germany. We'll talk about it a bit later. I think very, very critical is if we are successful, if we are innovative and entrepreneurial, we are able to recruit and motivate talented people, extremely critical to build a successful company, and this is what we strongly believe in with Jan. And we have very successful been in different kind of partnerships, in working with a retailer, Coop 6 years. We have grown a company from zero into a company with over 80,000 customers and over €1 million profit this year. And we have been building a different kind of joint ventures, including, for example, the Verif is a kind of this type of company where a young entrepreneur came with an idea and we jumped on this opportunity. What we are saying comparatively to large banks, we are much more flexible in giving options, we are much more flexible in giving ownership structure to talented people, so we can be as an attractive partner. This is how we also see ourselves, for example, growing into Poland. It's not that we're opening a Inbank branch in Poland with the Inbank skills, but recruiting a talented team which is skin in the game in Poland. And finally, we like to definitely grow by extending our existing business model to new markets rather than thinking how to grow in an Estonian market with new products. We can do it a little bit as this Inbank leasing opportunity shows, but basically main growth is clearly Estonian market is for banking assets 15 billion, 16 billion euro loan portfolio, deposit portfolio. Polish consumer finance market itself is twice as big. So if we think where is it better for us to grow, it's clearly to grow internationally. Maybe we just very quickly jump over. I think this is a critical basis for our business, the technology and ability to use basically different partner sources through this for distribution as well as for the credit information.
Yeah, but if you add, maybe this picture is also showing that what we are doing, basically we're designing different business processes and integrating technology into that. Therefore, our core competence as a bank is basically, it's more like we're engineers rather than bankers in that respect, because we have to find the ways how to make lean, effective processes. And as Priit already mentioned, that we would like to keep technology centralized. The business process is also a very important part of the technology, and then we would like to keep it also kind of centralized. And this is giving us, in the long run, I think, very good potential for cost efficiency in our business. Really important also factor. But this is who we are, yeah. We are designers of the business processes and integrating technology into it.
I think to add, basically here, it's also, we believe also in automatic and scoring-based credit decision models, because this is something where we can continuously basically get the feedback about our credit decision and improve our credit algorithms. And this is a test and learn approach, which we believe, one, is efficient, but second, actually eventually provides a better credit decisions as well. I think we have this market position slide now. We can just take a look at it, and we'll jump over it. Somehow it was in a different sequence in our presentation, but let's move on to consolidated main financials. Basically, what to highlight here is, as you can see, in 6 months, total income is almost as big as it was for the whole year of 2015. And income growth in 2015 to 14 was 96%, but actually it has increased 6 months 2016 versus 6 months 2015. It's been 145%. At the same time, we can see clearly a very high increase in cost. Previous year it was 237%, but as I highlighted, this was part of the becoming a bank, starting Latvia and acquiring the 100% of IT company. And today, clearly in 2016 already, the revenue growth has increased much quicker than the costs, which are up 64%. At the same time, we are experiencing also higher loan losses during this period of time. This is part of the consumer finance business, but it's also part of the IFRS provisioning methodology, where basically a bank like ours has to provision, in general, provision all the working loans as well on a predictable default rate ratio. And that means that basically if our portfolio continues to grow, we also have to write down a certain part of our portfolio in anticipation of the future loan losses. So not all the loan losses here are really a loss money, but it's actually a provisioning which is covering anticipated loan losses in the future. Maybe only thing to highlight here is notable drop in a second quarter profit. It's more of a technical nature, as we previously have done this general provisioning recalculation on a 6-month basis. We did it in a second quarter, and provisioning, which covered also first quarter, was done in a second quarter, so it gave some kind of volatility. So results in the future, we will start doing the general provisioning recalculation on a quarterly basis. I think second important thing to notice is still that improving return on equity and improving cost of income ratio with an increased volumes in our business. And this we continue to believe is going to be also the trend in the future. Can move on. Maybe a slide on a capital and funding. What is critical, our portfolio is very, very straightforward. We're very simply understandable bank today as a small bank, but also as a business is highly focused. Our portfolio consists of a loan portfolio and liquidity we have to keep in order to satisfy potentially our depositors' need. What is important to highlight, though, in this slide is that under the other assets of 2.3 million, we have investment into affiliated companies, Coop Finance and Credidibank Finance, in a value of 1.2 million euro. It's a value of our cost and accumulated profit on equity method up to that point. However, we have already in 6 months earned nearly 1 million euro profit on those investments. So clearly there is a there is a value in that part of the balance sheet. And secondly, what is important, what happened after 6 months, and this is all results are based on the 6 months 2016. We raised equity in July, 1.1 million, and we also had a July profit into our equity. So our equity, in fact, has increased to 10.7 million euro as of right now. Very highly, quickly, you can see our key people here. I think we're not going to stay too much on us. The core people here, somehow all with the previous Hansa Bank background, and not necessarily by coincidence, but this is where we all come from, and the work culture and the ethics and innovative entrepreneurial approach, I think, is what has these people together. Just a couple of words about our international members of the management. Artur Saburovs has about 18 years experience in consumer finance, previously worked in Credit, which became a Société Générale, French large consumer finance bank, then worked for Norvik Bank and in consumer finance, and later in Big Bank Latvia, and running the Baltic hire purchase business for Big Bank. And Maciej Pieczkowski, our Polish head of a branch, is previously worked 6 years in GE Money Bank as a latest job in Poland, and was a head of retail products in GE Money Bank. And GE Money, in many respects, basically is a pioneer and probably previously one of the largest consumer finance companies in the world. And Maciej has brought with him actually a good team of GE Money people to our team, Inbank team in Poland. Also the head of sales and marketing has joined as a deputy head of a branch. So we believe also have a strong team in Poland. Mm-hmm. Maybe we just, for the sake of time, jump over the detailed financials. I think we have generally covered the financials here, and talk about growth plans. Yes. A little bit. Yeah.
Okay. Quickly, the slide, the main growth drivers. I would like to talk about those ideas and plans. As Priit already mentioned, and this slide, which now you also saw from the presentation regarding the market share, we can see already that we are currently selling in Estonia something 20% of the new sales, and currently in the portfolio-wise, our market share is something around 8.5%. So most clearly, we can see the growth also in Estonia consumer loan market for Inbank. And there most definitely we will put our efforts. We are strong believers of doing everyday business very thoroughly and paying a lot of attention to the details in that respect. Hire purchase, we cannot see like a very big growth because still it's a most mature product in our portfolio, but some increase most definitely we projected. We are working also integrating the Verif more thoroughly into our business processes and actually get some efficiency in Estonia. And moving further, I already mentioned that we would like to enter into German and Austrian deposit market. For us, it's important because then we are basically widening our funding sources. We are already got from German financial inspection the approval that we can start selling the deposits in German market, and we are entering into a strategic cooperation with Raisin.com, who will be our channel, and we are expecting to start activities already in the fourth quarter 2016. Regarding Poland, already mentioned that starting from the 1st of August, the team of 4 is already working. we are preparing basically all the business processes and all the needed analysis. And in September we are starting the IT development. We are expecting to enter in the first quarter 2017 and start to be operational. And last but not least, there is building organizational capabilities, and this is for us really a logical topic as well, because when organization develops, especially when we're talking about risk organization, we need much more resources, much more knowledge, much more competence into it. And of course, to the increase of our different activities, we need also support from IT. Therefore, we are currently in the phase of hiring and finding new people. And so we are expecting that our organization will grow in the future as well. So they are basically our main growth factors which we can highlight today, and it's supporting basically our idea that we would like to keep our product portfolio as it is, but getting the growth rather in the new markets than in Estonia.
Mm-hmm. Next slide just gives a very brief overview of a Polish consumer finance market. I think we're not gonna jump into it. You can go through it, and if you have any questions, of course, we're ready to answer. Just to cap up basically our investment highlights, we have a profitable business model which has a proven track record and strong market position in Estonia. We have a banking license which has access for sustainable funding throughout the European Union. We have a strong international investor base which has supported our growth so far and will continue to support in the future. We try to open up our bank more towards new investors. We have an excellent proprietary technology and actually many market-leading digital solutions currently in Estonia, which we try to bring into new markets. Experienced and professional team, and clearly this company is just getting started. We have a very good potential to take this business model, what we have, into new markets. This is to cap up our investment highlight. Rest of the presentation already talks more specifically about our subordinated bond. I think we're not gonna talk about that at the moment. The bond will have a 7% interest rate and is a 10-year maturity. And we are trying to raise 5 million, but could be, in case of oversubscription, increasing it up to 7 million euros if we wish. I guess that's to cap it up. And now we are ready to answer the questions, and please send in further questions if you have. We have received about 4-5 questions at the moment. I understand we will one by one start answering those questions. First question was pre-sent to us, and the question is, how does Inbank position themselves against LHV, Credit24 and Swedbank? Maybe the high-level answer is that yes, we to some extent compete with other banks and companies, but that really on our core, our focus has always been that how to find new distribution models and partnerships to distribute consumer finance. And we don't necessarily think in terms of competition, especially with the named 3 banks. They clearly compete with us, and we see them clearly in the market, especially in hire purchase. But as you see, we have been building our growth through more or less exclusive channels like Coop, like Auto24, and this is how we see our focus in the growth. We don't do very much direct marketing. We are really, this is the way we like to compete. What we do compete with is, and which is not mentioned here, is a largest consumer finance player in Estonia is Swedbank, about 70% consumer finance market share. And they clearly set the price and conditions to the market, and those are the ones we continuously keep in mind. We see that we have to meet more or less Swedbank conditions in the market and be better and more efficient in terms of distribution, credit decision making, client service, and work just a little bit harder every day. Second question was that Inbank points out that we have room to improve our risk management. Can they elaborate? Well, as a bank, you work with risk management on a continuous basis. We did mention that both on our annual report and also on our 6-month report. And as you can see, a risk cost for a consumer finance bank is a very, very big chunk of our profitability. So we need to continuously improve our risk organization. What we have really specifically mentioned is that so far when we started the bank, we had a risk and finance organization as a one organization. And having growing both on a reporting side and on a risk management side, this is the step we're going to take, is we're going to separate the two organizations. To make clear though, philosophically, we still believe that risk return is the approach we need to take in our business. You take a risk in accordance with the return you receive from that risk. And this is how we actually design our underwriting policy as well. However, we see in the future that we need to still, in order to invest into risk organization even more, to separate risk and finance organization. And second, learning from us as becoming a bank, it's not only enough that the loan becomes profitable over its lifetime, or portfolio is profitable over its lifetime. We constantly need to manage also our capital base. And now as a bank and in a phase of increasing regulation, capital management tying up with risk management is becoming a much bigger priority for us. This is the second step towards which we are moving, and this means that what we have said, that we need to improve our risk management, those are the areas where we move on. Next question is, how big part of the business is joint venture with Credidibank? Sanctions on Credidibank owner, what's the impact on the joint venture? Credidibank finance portfolio is 14 million euros. We are 49% shareholders of that company. What we earn from Credidibank finance into our profit and loss statement is about 5% of our revenues right now. And this is the size. We haven't seen any impact from the sanctions. First of all, actually, Credidibank has been owned by Bank of Moscow for a long period of time, and once the sanctions came on VTB Bank of Moscow, in fact, indirectly, they were impacted already then. Now they have been just kind of mentioned in this new sanctions list by US Treasury Department. It does impact probably their business with dollar transactions, maybe some kind of cross-border business. Our business is 100% focused on Estonian retail.
Yeah, I don't think that it will be like impacted at all, because yeah, we are purely Estonian retail oriented product and consumer loan to Estonian retail customers.
Only indirectly we can see that there is a certain impact perhaps to the brand.
But still, statistically, to follow us the numbers, we haven't seen any change basically.
Okay, let's go to the next question. Total balance sheet is 63 million. Next question, sorry. There are capital adequacy ratios outlined in the prospectus on page 7. What is the difference between capital ratios and regulative capital ratios stated, Marko?
Yeah, the main actually the only difference there is that European regulation is very strict on the process. What needs to be done with profit from current financial year in order to take that into account as a capital. And that's the difference, basically. If we look at the capital ratios for ourselves, then we also include the profit for the first 6 months of 2016 into our equity. When we are reporting regulated capital position, then the profit from 6 months of 2016 are not included. Regulation states that profit for financial year can be included in the capital base in case it is audited. And according to current plans, Inbank will start to audit its quarterly profit starting from third quarter of 2016.
So we hope to take this profit into account by the end of the third quarter. Next question, the balance sheet is 63. At the same time, one slide presented total credit portfolio 85. Yes, I understand this is a bit confusing, but this is the way we look at our business. It includes our affiliated companies. Since we don't consolidate Coop Finance or Credidibank Finance, since we are the minority shareholders, these numbers differ. However, for us, since we manage our business both in Credidibank as well as in Coop Finance through also sales in both organizations, we like to look at it as a consolidated view. Although in accounting-wise, in our balance sheet, those companies don't exist.
But they exist only in the balance sheet as an investment.
As an investment, and we recognize this investment based on equity method. So we do get our share of profit into our profit and loss statement, but portfolio is not consolidated. Next question. I didn't hear anything about non-performing loans. Any comments on those? I think I did mention here during the financial presentation that non-performing loans and the loan losses specifically have increased. I think Marko has a further comment here.
Yeah, I'd like to actually comment the result from 6 months of 2016. If we are stating in the presentation that loan loss in that period was 1.5 million euros, then to give a clear picture of what actually is in that, I would like to split that up. And as Priit already mentioned, then a big part of that is general provisioning of working portfolio. More exactly, this is 700,000 euros in the first 6 months of 2016, meaning that this is not actually actual loan losses, but this is future loan losses that we are anticipating to happen within the next years. And only 800,000 actually out of this 1.5 million euros is actual loan losses for non-performing portfolio. And of course, if you're looking forward, then as long as the balance sheet grows to grow quite rapidly, then we will see the number of general provisions or impact of general provisions in our profit and loss for regulative reasons. The growth after the crisis in 2007, 2008 has been done much more expensive for credit institutions, and this maybe highlights a bit that.
If you want more information on specifically our overdues and our provisioning ratios, you can go to a long presentation and you can see we have broken it down. What is our 90-day overdue, 180 days overdue, and what is a provisioning ratio? What I'd like to highlight is basically that we are currently about 120% provisioned of 90 days overdue loans. This is an impact of this general provisioning in our balance sheet, which means that all the loans in a portfolio which are more than 3 months in arrears are actually more than 100% provisioned. So we are, as a growing company, basically growing over 100%, we are needing to make these general provisions up front, and this basically creates a situation where you actually have quite conservatively provisioned, and this is broken down in this long presentation by different business units. You can take a more detailed look, and if you have further questions, we are glad to answer. Next question. What are the sales channels in Germany and Austria? Basically, as mentioned, our sales channel for the deposit is
Raisin.com, which we basically made a strategic cooperation, which is a specific portal of distributing deposits, European, like different countries' deposits to Germany and Austrian retail customers. You can basically look from the mentioned address.
Yeah, you can go to raisin.com and see there are banks there already today offering deposits. We will be just added as a new player, and German and Austrian retail customers who register with Raisin can start putting deposits through that website into our bank. What happened? What are the reasons? What do you prognose in the next year with the rate of credit losses to loan portfolio from Q1 15 to Q2 from 2.4 to 8.8? I think there, to some extent, basically this already been explained by this increased provisioning, general provisioning ratio. Second part, if you take 2 quarters in isolation, this is something we don't suggest to look, because basically in the first quarter of 2016, we did not do any general provisioning changes. We just did them in the second quarter. Marko?
Yeah, the second quarter of 2015, actually this was the period where we only had hire purchase product launch in Estonia, and the portfolio growth was not as rapid as it currently is. As I explained earlier, then the growth has been done quite expensive for us, and this is actually what gives also volume in the loan losses numbers in second quarter of 2016.
Also, again, if you go to long presentation, you can see more specifically that, and it's also in our 6 months report, that Estonian credit portfolio continues to perform extremely well, and there is no change in quality. However, our Latvian portfolio has decreased in quality and probably will continue to decrease in quality in the near future. However, we have taken also in Latvia clear steps basically to reduce the credit losses, and this already has basically showing in a new sales quality. However, this basically takes time to end up basically in our financial statements, because these changes were made in March, April this year. Yes, emission prospect is available today. It is on our website, and it's also in Tallinn Stock Exchange website. Raisin.com is well-known channel for consumers in Germany. Hard to say. Basically, what we know about Raisin.com is that they have been, I think, raising what was it, 5 billion euro in deposits over their existence period. I think if we look at Estonia today, we have about 50 million euro, now 55 million euro. Okay, sorry, 1 billion. This was exaggeration. 1 billion euro of deposits has been raised by Raisin so far. It's a fairly new startup platform. It operates in 30 countries and with 19 partner banks. And they have raised 1 billion with their customers so far. We are today about 55 million euro in deposits in Estonia. Estonian deposit market for private individuals, time deposit maybe 5-6 billion. So we really, what we look at it is more as an alternative distribution channel to a very big market. So I think if we come into the market with an attractive offer, we see it as a attractive platform. And I think the main message here is we don't need to raise hundreds millions to be successful there. We really need a few million euro at a time to continue growing our loan portfolio. that's it with the questions, looks like. Thank you very much for listening, and if you have any further questions, please feel free to contact us, or we also have a couple of investor seminars in our Inbank office. One is on Wednesday and this week, and the other is on a Wednesday following week. So if you want to learn more or see our office or meet us in person, feel free. And I think those will also be in Estonian language, so will be easier for everybody who's native Estonian.
Thank you.
Thank you.